My name is Fiso Mboto, and today I'll be taking you through some of the highlights from our Woolworths company update report. Starting on the summary side of things, we see the stock as a buy with strong performance out of the food business to offset the volume pressure in fashion, beauty and home, and then the macro backdrop in Country Road Group. So what we'll see is that over time, the food business has become a bigger piece of the pie in terms of Woolworths revenue. And that's been doing particularly well over the last few years, and I'll have a chart with that as well. To offset some of those volumes from fashion, beauty and homes, what we've seen for the last few years of that specific segment is that they've been trying to turn it around. So get a lot more full price sales out of it, do a lot less discount sales, increase prices, and eventually get to a point where they're having strong like-for-like growth. So that's been happening gradually. It's still a working process, but it does provide some upside potential out of there. Then the macro in Country Road Group. So I'll speak a little bit of what the last 7 years have looked like for Country Road Group in Australia and where the risks currently lie and how the business is almost protected by the performance of that food business. So we have an intrinsic value of about 67 Rand per share for Woolworths, with an upside of 31% now, but it was around 33% when the report was released. Our recommendation is based on low valuations for Woolworths on a risk-adjusted basis, considering all three segments and the current consumer environment. So what I'll do is split SA and Australia to sort of give a really good context of why we're seeing this kind of performance and really where the upside potential could really be, and how the pressure in Australia has put pressure on the performance of Country Road Group. We expect that the food business should continue to be a stellar performer as it has, holding its margins and expanding on volumes while increasing prices. And I think that's one of the standout parts for Woolworths overall, specifically with the food business. It's a little bit of a different story with fashion, beauty and home. They have been consistently increasing their prices, and volumes have had minimal impacts, and like-for-like growth has continued to be positive. Then when it comes to Country Road Group, where it currently is provides some upside potential from a recovery in consumer spending with easing inflation and decreasing interest rates. I'll speak a little bit to that with the chart a little bit later on. Then we expect fashion, beauty and homes turnaround to continue with full price sales currently being a large portion of its revenue. I think full price sales as it stands today are about 80% of their revenue, which is a big increase and which is a big improvement, given that the sort of basis of where the turnaround story was is to do a lot less discount sales. So now, considering the upside, which is there primarily because you're paying up for their food business, we highlight the risks presented in the consumer environment in both the regions. The consumers in both regions continue to face macro pressure in SA and in Australia. We've sort of seen it in CRG's performance and fashion, beauty and home's volume pressure, but we sort of anticipate that the risk will be offset by the strength of the food business, which is about 64% of revenue as it stands.